Hello traders out there in Traderland, D7 here, and the markets took it on the chin in the last hour and a half of the trading day. The Dow dropped 81 points, the S&P 10 almost 11, and almost 15 here on the NASDAQ, 7 on the Russells. A full 1% drop on the S&P and more than that on the Russells, with the VIX a little bit of a pop, not much, right at 2%. I would have liked to have seen a 3 or 4% to validate this drop, but we don't have that. So just keep that in mind on the fear indicator. S&P daily that we're looking at, zoomed in here, we had this nice run last week and the week before, building a high base formation. A high base formation is in fact bullish. However, the last few high bases that we've had kind of petered out. This high base pot dropped, this high base dropped. Well, this high base drop maybe. Now, but the bottom line is high bases are more bullish than they are bearish, regardless of what you're seeing right now, and rising wedges are more bearish than they are bullish, regardless of what we've been seeing. So be careful not to get fooled to thinking, well, you're not going to start paying attention to technical analysis, because after 10 trades, after 100 trades, after 1,000 trades, technical analysis always pans out. So you want to make sure you have technical analysis in your favor, never being early to the party, but being just on time. Wait for the action to take place before you commit to the trade. So this high base showed a lot of weakness, especially in the last hour and a half of the broad markets. And just to let you know, the volume was very, very light today. All the exchanges were talking about the light volume, and we did get a spike in volume when the Fed talked at 2:15 when they announced that they were not changing interest rates. So, but nonetheless, the volume has been very, very light today. And then we have the nosedive in the last hour and a half with increased volume as far as the banks are concerned on the sell side. So the financials took it hard, basic materials took it hard today, and there for a while the US dollar was very, very strong, and very, very weak, was taking a hit when the Fed came out and announced, but then it started strengthening back up before day's end. So here what I'm looking for is we made a higher high today and a lower low. Right now we have the big red candle encompassing this whole consolidation or this base right now. But I'm wondering if we will see any downside. We do have a decisive curling taking place on the MACD, and we continue with the negative ticks on the histogram below 0. So yeah, that's where we're at. Be careful trading in this environment unless you're a day trader. Do not go short until you get some confirmation to the downside. And I'll tell you, you could get a big large candlestick coming down and then a retracement by day's end. Don't get caught in that. And here, if it's going to heal itself, it needs to pop up over this trend line. So at this point, I'm not calling one direction or the other. I'm still sitting on my hands waiting to see what's going on. I had longs going up until today. I still have the longs going. I didn't lighten up on any of them, but I did put on some beefy 300% or 3 times bearish ETFs to hedge myself. So there you are. Happy trading. We'll see you there in the forums.